Today on the Blockchain Report, Bitcoin is hanging on to dear life at 92K like a floating door from the Titanic, and it might have something to do with Cloudflare unplugging the internet this morning after a traffic spike so strange it sounded like the digital equivalent of hearing footsteps in your basement when you live alone. Congress is gearing up to release the full Epstein files, which has every politician suddenly behaving like they always meant to clean out their inbox today, of all days. And analysts blaming Bitcoin's drop on profit-taking, thin liquidity, and markets are collectively realizing that macro pressure didn't magically evaporate just because everyone was having a good time. Whew, all that and more in today's show. Let's go! All right, everybody, welcome back to another episode here at the Blockchain Report. It is Tuesday. The markets are moving, the news is doing what it does, and we've got a lot to talk about. In fact, we're going to be joined by not one, not two, but three special guests on the show today. But before we get going, let's check out how the numbers are looking in this morning's market rundown. So let's roll the stinger and get to it. All right, so we're not on the right camera right now, but now we are. Perfect. Okay, so this morning, Bitcoin hanging on to that 92K level. We even saw it dip briefly below 90K in parts of yesterday, but we're back up, and I think we're getting back on track here. But I want to dig below the actual chaos that's going down here and get into the numbers, okay? So this is the part of our show called Bitcoin Alpha, right? And as always, what I'm telling you is not financial advice. This is just my personal read on the market using on-chain data, okay? So Bitcoin right now trading around just under 93K, and today we're looking at three major metrics that help us answer the big question everybody has right now. Is this just another bull market dip or the early stages of a bear market? Let's dig into the numbers and take a look. Let's bring up our first chart of the morning. Okay, so what we're starting with today is our first chart. This is the net realized profit and loss chart. This basically tells us how much profit or loss Bitcoin investors locked in on chain each day. So these big green bars that we're seeing here, that's people taking profits. The little tiny red ones down here, that is people taking loss, panic selling at a loss, okay? So right now, I want you to take a look at these numbers at the bottom. So we have negative 1.33 billion right over here on the right side. I can do better than that. Come on, there we go. Okay, so what that is yesterday we saw about $1.33 billion in realized losses. That is the biggest panic selling day since August of 2024. Okay, and you can also see we've had some other dips of kind of a similar nature over here in July of 23, in July of 24, and then another one right over here kind of in the middle ground area earlier this year, so 1.22 billion. So the last three times we hit this level of losses in this cycle, those were the local bottoms right before the next big leg up. And you can see after we hit those, things went higher, they went higher, they went higher, okay? But here's the nuance here. If this were the start of a true bear market, these loss spikes would start getting way bigger very fast, like what we saw during the China mining ban back in 2021, over $7 billion in losses, or the January 2022 breakdown with $5 billion. So right now, the data says this still looks like a normal bull market flush until the losses become more extreme. So looking pretty good so far. Let's get to chart number 2. This next one here is the Mayer multiple. Okay, this tells us how far Bitcoin is above or below its long-term trend by comparing price to the 200-day moving average. Okay, so the first thing I want to take a look at here, and I was informed this morning I can change colors on this, so let's give it a try, shall we? So the things we want to look at here first are the 200-day DMA. That's this blue line here, and I'm going to trace over it. I'm not doing a lot of justice, but I'm trying my best. Then we have the orange line coming up here, and it's not even letting me click on the orange. It's just coloring in the orange thing. So I guess we're with blue now the rest of the day. So you can see the orange line right above the blue line there. Okay, and then we also have the green line beneath the blue line. So all year, price has been bouncing between the blue line that I was just able to trace for you, and which is the 200-day moving average, and this orange line above it, that is the mid price band, okay? So if we look at these green circles we're seeing here, right? Like this guy right here. So yesterday, price bounced right above that green line. You can see that right over here, okay? Which is basically where we've seen the last couple local bottoms land, all right? So now, yes, back in 2021, price dipped below this level briefly. We can see, right around here, it did that, okay? And that was during the big bull market correction that we saw. So bulls really want to see this green line hold for the next several days, not just one. And that green level we're seeing is sitting around 88,300. So right over there, okay, we can see it, all right? And if price holds above it, above this $83,000 300 line, it still looks like a bull market correction. But if it breaks decisively, then we can say that momentum is definitely shifted. So let's go to our final chart here really quick, okay? This last one's the unrealized profit loss ratio. Now this shows how much paper profit or loss investors are sitting on without having sold yet, okay? So we can take a look at the last couple of lows we saw here, here, and here, okay? The ratio is sitting at the exact same level as the last two local bottoms during this cycle. Okay, so there was 1, there's 2, here's where we are now at 3. This is another data point that's saying, hey, this is looking like a dip, until of course it isn't. So for short-term holders, they're screwed right now, okay? Sorry guys, their cost basis is higher, they're already underwater, and they don't have the luxury to wait. But the long-term holders, they're still way up, sitting on massive unrealized gains, and they're the ones that can remain patient right now. Now, back in 2017, this metric bottomed around the same level during the big bull run dips, okay? But once it broke below that range in January of 2018, that was the confirmation that the bear market had officially started. So again, this chart is flashing dips look like dips until, of course, the level breaks. So the big question is, what do all of these mean together, right? That's what we're all wondering here. Paint the picture for me, Hank. Well, putting all these charts together, Bitcoin is matching the behavior of the last two local bottoms almost perfectly, which is giving bulls everywhere a lot of hope, okay? But at the same time, dips look harmless every cycle right up until the moment one isn't. So short-term holders are already bailing, long-term holders still have room to be patient, and until these metrics break down harder, the data leans toward this is a bull market dip until proven otherwise. All right, we got a lot to cover today, so let's hit the stinger for our bull run and get on into it. Let's go. All right. Well, it is time for this morning's Bull Run where we go over the top stories of the day, and we'll be welcoming our first guest in a minute to chat with us about it. But let's get into our first story of the day. And in case you've just woken up this morning, the internet has been a mess. You see, Cloudflare woke up themselves this morning and decided the entire internet needed to experience what life was like back in 1997. Actually sounds kind of nice when I think about it. Now, the company suffered an outage that knocked major websites and services offline worldwide. ChatGPT went down, which means millions of people suddenly had to write emails in their own voice, and they just absolutely hated it. X also went down, meaning for a brief moment in time, the outage cycle had to take a commercial break. Even Down Detector, the website whose full-time job is yelling, "Hey everyone, this is down," wasn't accessible for some users out there. That's how you know how bad it was this morning. A Cloudflare spokesperson says the company observed a spike in unusual traffic this morning and explained that some traffic passing through its network began experiencing errors, which is a very polite way of saying everything lit on fire and we are still standing in the smoke trying to figure out who brought the matches. Now, the spokesperson also admitted that they do not yet know the cause of the unusual traffic, which is comforting in the same way your pilot saying, "We're going to land eventually, I hope," is comforting. Not at all. Now, the company said they were all hands on deck to restore normal service. Cloudflare's software guards roughly 20% of the entire internet. So when Cloudflare goes down, a significant chunk of the web basically holds its breath and hopes the problem is not someone doing something bad. Now, shares of Cloudflare fell more than 5% in pre-market trading because investors love nothing more than panicking before breakfast. And the timing of this outage didn't exactly help anyone's nerves either. It comes less than a month after Amazon Web Services suffered a day-long disruption that took down numerous online services. Cloudflare is now the latest player to join the "oops, the internet is down again" tour. and it's not good. All right, so joining us today to chat about this story and many more, we have one of RoxomTV's own, the great Nolan Bowerly, joining us in the studio today. Nolan, happy Tuesday. How are you? Always great to have you back on the show.
I'm enthusiastic about the future of humanity. I love life, and I'm not too worried about Cloudflare. That's fine. It was a wild morning. It was a lot harder to do my show this morning. I'm not used to not having Twitter. I get all of my information off X, and I usually share screen, which I couldn't do, but I had some guests, and it made it easy indeed. Now, I do want to recognize that Rumble wasn't down because Rumble had realized that Rumble knew about the Amazon Web Services and Cloudflare difficulty, how having all your eggs in that one basket could create a systemic problem for them. So there's a good Bitcoin treasury
Right.
company that built infrastructure out of El Salvador and operational. So that part worked fine.
Yeah, well, I'm glad you brought them up, Nolan, because Cloudflare going down basically broke a huge chunk of the internet this morning. Apparently not Rumble, though. So how big of a deal is it when one company has that much control over whether or not the internet works or not? That seems like a problem.
Yeah, it's been, especially in the crypto world, I know a lot of Bitcoiners for a long time criticized Ethereum for basically running on Amazon Web Services. So do most of the exchanges. I know when Binance first came out and it was architected the way it was, it really surprised people that it was kind of like a cloud-based exchange. It really did fly in the face of a lot of key management principles that the original exchanges were built out of, and but that was a real innovation, I think, that CZ brought in the end. But it does leave them absolutely all vulnerable to the actual internet infrastructure. You can have all kinds of choke point aspects to it that come around. That's why Rumble went ahead and built in El Salvador. They were worried about how choke points would function within YouTube, of course, because when you couldn't censor on YouTube, usually what you went
Right.
to after was to limit the payouts. So Rumble's gone even further. So not only is the architecture of their servers in and they own them, they're in El Salvador, they're putting a Bitcoin wallet on the platform as well to get further away from those problems. So this has been known to Bitcoiners. Now, I don't know everything that Bitcoin has done under the hood to avoid any type of Cloudflare issues. The only trouble I had this morning was accessing price feeds. I couldn't see the price feed. I couldn't get data. But it looks like Bitcoin ran just fine because it's architected on all kinds of different networks, not just Amazon or Cloudflare.
Right. Yeah. Well, yeah, glad to see that. I would have freaked out if I was like checking the price on Coinbase and Coinbase was out or something. We'd have some big old problems here.
Yeah,
When
Swan had that. Swan had that. I know a
did
lot of
they?
people who didn't know there was trouble this morning said, "Oh, must be a bull market because the exchanges are going down." And I said, "Well, I don't think Swan is down because of demand. I think," and they were just unaware as they came to the show. So.
Oh man, I'm going to have to talk to Corey about that. Now, Nolan, when outages like this take down so many big websites that people use every day, we're talking ChatGPT, X, and just a bunch of others, does it show how fragile the internet really is behind the scenes? And should we maybe do something about that? Because that kind of seems like ripe for, I don't know, trouble from maybe a foreign adversary or something, right? Like, that's kind of scary.
Well, absolutely. And I think Bitcoiners, like one of the memes that Bitcoiners lean into as far as worldview is being anti-fragile. And being anti-fragile is not the opposite of being durable and hard. It's about growing stronger each time you are actually threatened. So it's not quite the same opposite as just strong. And anti-fragility is about learning from mistakes, learning from vulnerabilities. That's what Rumble had figured out, right? They saw where, Rumble essentially came from the refugees of YouTube censorship and that choke point stuff. So they built an
Right.
anti-fragile system. So I think as far as the way we look at this stuff, certainly we don't want to have all of our eggs in one basket. It's very dangerous to be living this way. I mean, even I hear all the time X has been planning on creating its own infrastructure so they don't get choked out by outages like Cloudflare. So I continue to believe, Bitcoiners understand the internet is a lot bigger than the World Wide Web, and that having actual pipes down outside of the World Wide Web can help reinforce our communications ability. I know, people tell me I haven't done it, but people tell me you can run a Bitcoin node using shortwave radio and various other
Oh.
signals. Yeah, well, apparently, yeah. I mean, it's been around.
Hmm.
Blockstream built it years ago, so apparently there are other ways
Yeah.
to engage the network. I mean, you can mine Bitcoin by hand, just not competitively. That was an exercise I did in the early days, mining by hand to
What
understand
is
how it
that?
worked. You can actually
How does
find the
that work? You're
nodes.
just like turning a crank or something like
Yeah,
how do you do it by hand?
extra long division, extra long division. You got to do all the, yeah, extra,
Oh
lot of
man,
long division
sounds
and
horrible.
solving for unknowns. It's terrible. It is terrible, but you can do it. You're not competitive, but it allows you to find the
Right.
nodes and mine Bitcoin. It
Oh
was like
my
a
god.
thing I would recommend to people back when the difficulty adjustment was very much lower. So that has a big difference in how much math you have to do. But that was something that I
Right.
had put into my repertoire of like what is Bitcoin to help people understand in the old days. I was like, you want a Bitcoin lottery ticket? Here's how you get one. Solve this math problem. And, it was sort of an
Oh my
exercise I
goodness.
put along the way. So, as far as I understand, there are redundancies in Bitcoin, but probably not of the level that would be required to perpetuate the network over that difficulty adjustment because it's probably too high right now for all of these edge cases. So we're probably captured by this. So again, Bitcoiners
Yeah.
understand resilience and anti-fragility, and nobody wants to see an internet that can go down. Well, I mean, do we even know why it went down today? Was it like just some engineer who just screwed
Right.
up or something? I don't think we know, right?
Right. I mean, it could have been a cyber attack. Who knows right now, right? And, it does make the case for something that we talk about as Bitcoiners a lot, which is decentralization, right? When something like this happens, do you think it makes the case for a more decentralized internet, or at least remind us we're still stuck with a giant choke points we can't escape yet?
I think it does, and I think even what we were talking about last week with some of the Epstein stuff, and I remember talking about kayfabe and wrestling. People really
Mm-hmm.
only do learn by going through things. We're constantly. It's what we've learned in Bitcoin. If people were really
Mm-hmm.
logical and they used like reason, we would already be on a Bitcoin standard. But people are not
Yeah.
logical. They've got to learn through
Well, we all got to.
experience.
Yeah. Yeah. We all got to touch that hot stove ourselves. We can't just take someone's word for it that it's hot, unfortunately. So, the human experience, I guess, right?
Yeah, I'm, like even right now, my human experience of why my resolution is so low, I'm learning a lesson about how to log in on Zoom before I actually come on these calls because my settings are all off and I don't know quite how to fix it. So I will,
Yeah.
endeavor to have a better feed next time, and that's how you learn. You
Yeah.
see the grainy picture and you wonder what on the other end with Zoom and all of these things. And so there's a certain amount of, even when I go live every day, I try to limit the surface area of attack and simplify how I go live. And that's a
Mm-hmm.
principle of an adversarial environment. It's something that Bitcoiners have understood about internet architecture a lot better than just
Mm-hmm.
people who consume the internet. It's not just consumer
Right.
technology, it's an adversarial environment. You have to know what the other people can do, are going to do, and you've got to work around it. And Bitcoiners have
Mm-hmm.
understood that they exist in an adversarial environment for a long time. It's often what I think of as the main difference between crypto and Bitcoin. So cryptocurrencies are kind of part of that world of consumer technology, iPhone 11, 12, 13, 14, and you're trained to want the new one all the time. And I call it a
Mm-hmm.
2.0 attack, right? It's what Solana did to Ethereum. It's just faster and stronger
Right.
and better. And at 2.0 Ethereum, and now everyone thinks of it as faster and stronger and better. Bitcoin, of course, is the slowest. It's the dumbest contract. It's not a smart contract platform, but it shows in an adversarial
Mm-hmm.
environment that it is able to survive is what's valuable, that it doesn't need all of these super well architected, super 2.0 infrastructure stuff. It can use really resilient and reliable technology in a slower way, but in a way that guarantees its function and operations. So existing in an adversarial environment understanding the trade-offs and security considerations of an adversarial environment is, to me, fundamental to a sort of Bitcoin worldview and fundamental to how we understand the actual physical nature of the internet. So it's decentralized all the way as far as I can tell through experience, right? You don't want to see these things happen from time.
Right.
Imagine you were trying to execute trades today and the price had dipped and it's like,
Yikes.
you're in trouble. You're in trouble.
Right. I expect this out of Robinhood, but everybody else, come on, guys, get it together. And you spoke of an adversarial environment. Our next story is talking about somebody who's kind of negotiating one of those right now. So let's talk about it. Because sometime today, the U.S. House is expected to vote to release the Epstein files and expects the Senate will pass this as well. And the White House themselves are bracing for impact, as President Donald Trump has spent months pressuring GOP leaders to delay the vote. But over the last week, he realized that dozens of Republicans plan to break ranks. He now says Republicans should vote to release the files so they can tell their constituents they did something meaningful, even though administration officials insist there isn't anything new in there. Part of the headache comes from a 2018 email Epstein wrote claiming Trump knew about the girls. Well, critics say the administration created part of this problem themselves, like when Attorney General Pam Bondi publicly said she had a client list on her desk earlier this year. Now, there is no evidence Trump took part in Epstein's crimes, and Trump says he and Epstein had a falling out many, many years ago. Even some Republicans calling for the release admit it probably won't settle anything. But Trump's real frustration is that he feels Democrats outmaneuvered Republicans politically, which he does not enjoy, to put it lightly. He ended up supporting the release to avoid being on the wrong side of the vote. But look, regardless of where anyone stands politically, this is one of those stories where no one walks away happy. It's messy, it's emotional, and it's conspiratorial fuel. And it's almost guaranteed to dominate the headlines long after the files finally drop. Bringing Nolan back. Nolan, Congress is about to release the full Epstein files and everyone's acting calm even though nobody is. From your experience, does dropping highly charged files like this actually clear things up, or does it usually just create more chaos on the back end?
To me, I think of what has happened over the last few months, and I go back to kayfabe, and I go back to wrestling, and I go back to this idea that you can't nag people. You can't say it's been years that the Epstein thing was a story, and many times Donald Trump mentioned it in the 2016 election. He said Hillary is involved with all these people and Larry Summers. And now it's years later, and you've got every single group asking about it. I know I saw this interview, for example, with Patton Oswalt and Bill Maher. So he was on the Bill Maher thing,
Yeah.
and Patton Oswalt just had no idea what Bill Maher was talking to him about what's going on in the United Kingdom. So we exist in these
Yeah.
bubbles. And it's very hard to communicate through a bubble. I mean, I rarely hear, as a Bitcoiner, I rarely hear from Democrats what they think, what they know, what's going on. A little more I hear from Republicans simply because, there's a big overlap with Bitcoin and that kind of stuff. So when I think of kayfabe, when I think of what happens, just again, go back to when Epstein first came up in this cycle, which was the fight between Elon Musk and Donald Trump. Remember, Elon said, Donald Trump is in the Epstein files. And
Yeah.
immediately, what did you have? You had a breaking down of those two silos. You had everyone in the world asking for the same thing. The only other time I've seen everyone on the same page would have been the Joe Biden debate, where everyone saw the same thing. His brain was toast, and so everyone was reading off the same script. But America, unfortunately, for since Donald Trump came on the scene, has been living in a world where we're all watching the same movie, but we're watching the same screen, but it's two different movies. The narrative is completely different. The protagonists are different. The
Right.
heroes are different. The villains are different. And there's very little cross-pollination. You've seen that blue and red mind map thing of how social media is used in these isolated groups. So the amazing thing that's happened with the Epstein file is it's created a groundswell of demand amongst both sides. Now, knowing what I know about Trump, knowing how he operates, I'm left to believe this is exactly what he wanted. He's giving people exactly what now they're asking for. The problem was they were never asking for it before, and now they're going
Right.
to get it. And so we'll see what happens, but it doesn't look like there's anything vulnerable to him. But it looks like there are a lot of people who are going to be caught up in this. And now that you have everyone asking for it, it's going to be very interesting what happens next. Now, I agree. Like when we saw all this Bitcoin stuff that's related, here's the problem with the Epstein files is that you're going to have a lot of people who are going to mind read, who are going to say, "Oh, I know what they wanted out of this." And you're going to get a lot of people caught up in a lot of bullshit. I know all the Bitcoiners that got caught up this weekend. That was all a bunch of bullshit. Everyone has known about the MIT Media Lab, that the money came from Epstein. This was revealed this weekend as like some big story. Everybody knew Joey Ito had to quit in 2019 publicly because of this. There were questions about the exact, let's call it the fungibility of the money. Did the actual money that Epstein give go directly to these people? Doesn't look like it.
Right.
Doesn't look like any of the emails. He gave money to the thing, and the thing had money, and the thing paid for people, and some of them were core devs. So we'll see, but that you have now everybody asking for it, that you've got everybody demanding for this information. Did one of the few things that we can achieve in media in these polarized solitudes where everyone is asking for the same thing. Republicans and Democrats all want the same information about Epstein. Are we going to find out anything? I think we've kind of known for a while. I think Trump has been pretty wink, wink, nod, nod about it all. You never see Trump really sort of let something go out of control this way. Usually he has a way of getting ahead of narrative. He wasn't able to do that this time, and people have been wondering for a long time why was he so pitiful on this file? We're going to find out soon, but it looks like he's going to get what he wants. And so that's what I'm tracking. I'm tracking that you've got one of the rare instances where everyone is looking at the same story, asking for the same things at the same time. Almost never happens. So we'll see who benefits, but my prediction is Trump benefits very well off of this based on everything we've seen.
Yeah, I mean, first and foremost, it's just nice to see us reach across party lines and shake each other's hand and agree that child sex rings aren't for anybody. So that's good. That's the
Exactly.
first positive takeaway that we're getting from this. The Trump thing, though, rings a little odd to me. This 180 about face. You had the richest and arguably one of the most powerful men in the world, Elon Musk, have that tweet that just created this firestorm a couple of months ago. It feels a little fishy to me, but it is Teflon Don after all. But with that being said, I do think there are some cracks showing, which is, I don't know if you saw, they released a video this morning. I don't know if it was on Air Force One, where a reporter was asking Trump about the Epstein files, and he just said, "Quiet, piggy. You can't do that." I mean, I know it's Trump and he does what he wants, but you can't do that. So part of me thinks there's maybe more to this story than initially meets the eye, but that's for the conspiracy theorists out there to talk about, not me. All right, we're
I
moving
mean,
on to the next story. Oh, go ahead. What you got? Final thought?
yeah, look, what I always try to remember with Trump is, he's a bully, and people who don't
He is a
like
bully.
bullies, yeah, that's always been the case, right? And so there are always going to be people who can't handle bullies and who he bullies. And so that's sort of an isolated thing. I always give people who hate bullies grace to not enjoy the artistry of Trump because it's true. Now, some people are okay with the bully part, and he does it all the time, and that's part of who he is. So you've always got to admit that when he does bully stuff, he's being himself, right? He's not going out of character.
Yeah.
But I get why people don't like the bully.
Yeah.
I get it.
Yeah, I actually like bullies. I think bullies are an important part of the fabric of society, and I'll go as far as saying we need more bullies because everybody's getting soft, and part of growing up is learning how to stand up for yourself against bullies. That has been a very intricate part of the growing up experience for people for a long time. And if you don't ever have to stand up to anybody, we've got a bunch of spineless cowards walking around, and these are, it's like sometimes the things that seemingly at the surface aren't good are good for you long term. We all have to kind of take our medicine in some ways growing up. And I personally am for bullying as long as no one's like physically getting hurt, but I could understand the opposite side of that too. it's a precious society we live in now, and I just want everyone to be happy. So, all right, let's move on to the next story here. Speaking of people being happy, President Trump is saying that the $2,000 rebate checks funded by tariff revenue will allegedly arrive to Americans around mid-2026. So that could be something to be happy about. Trump says that the checks would go to moderate and middle income families and would also help pay down debt, which sounds great until you look at the math. He says tariffs are bringing in trillions, but analysts estimate tariff revenue is more like $200 or $300 billion a year, which is slightly different. Republican senators have already called the rebate idea everything from a bad idea to insane, and most want tariff money to pay down the national debt, not fund National Venmo Day. Oh, and there's the one small detail here. The Supreme Court is currently deciding whether Trump's tariff strategy is even legal. The justices sounded skeptical of using national emergency powers to justify broad tariffs without Congress. Now, if they strike them down, the government may have to refund tariffs to importers, not families, which would make the rebate checks vanish almost immediately. We're bringing Nolan back. Nolan, Trump says that he wants to send Americans $2,000 checks funded by tariffs, but the math ain't mathin'. When the numbers don't match the message, what should people be taking away from all of this?
It's debasement. It's the debasement trade all over again. It really isn't. I mean, just remember, they're not really ever planning on paying off the debt. It's mathematically impossible. The math broke down a long time ago. And so I think making these rebate checks, quote unquote rebate checks, are actually where fiat is headed. It's a full-on bribe. It's a bribe, right? And it's policy money. It's coming out in time for the 2026 midterms. It's going to be designed for MAGA folks. MAGA folks, of course, a lot of low-income folks in the MAGA world. It's not a bunch of rich people, right? The MAGA don't represent all the wealthy Americans. It's a populist movement, so it's a populist check. And in the worldview that I, as a Bitcoiner, have, I continue to believe that we're entering a bimetallic framework. So bimetallism being two monies, one money for consuming, much like what they have in Argentina to this day, right? In Argentina, you use the peso for coffee, you use the peso for Coca-Cola. But if you ask someone how much their house costs or how much they make in a year, they'll quote you in US dollars because that's their savings money. What I think is happening to the US dollar, all of these other Ponzi's are getting shut down, fiat Ponzi's. There won't be an Argentine peso anymore pretty soon. It's already on the US balance sheet. You can see many other fiat currencies going that way now that there are stablecoin buyers, now that the stablecoin companies can buy US treasuries instead of central banks. That's how the Ponzi worked, right? Central banks, the Canadian central bank, the Argentine central bank, they bought US debt and then bought oil with the dollars. And then their own money was for domestic consumption and domestic use. Not all Canada wasn't that way, but it'll head that way too. So in this world of bimetallism, I think fiat will get exactly what it asked for. It will be political money. It'll be policy-based money. It'll be food stamps. It'll be like what we saw from Snap over the past few weeks. Everyone's talking about Snap. Snap is the US dollar. That's what created a bank run. If we didn't have Snap going out, the banks are not solvent. And so it's going to really reduce into that actual equation. So I foresee much more of this. The $2,000 won't buy you that much. I mean, the meme that we have in Bitcoin with the stimulus check from COVID is how much is it worth in Bitcoin now? It's around 20,000 US trash tokens that you would have gotten. So it's 10x to more than 10x since 2020.
Right.
And, the fake inflation numbers that we're fed every day don't really account for it. So it's probably a better gauge on inflation. And it shows the case for Bitcoin as savings technology and shows the case for dollars as consumer money, as policy money. So this is in line, I think, with what a lot of Bitcoiners foresee in the future. It's in line with what people expect is going to happen to the US dollar, that it is going to be used for political bribes. And we go out of the US dollar system the way we came in, with bimetallism. Bimetallism was what existed before the Federal Reserve was created. It's what was in the Wizard of Oz, right? The Wizard of Oz story was really about bimetallism. It's about silver on gold. The farmers had silver. the gold brick road. They were not ruby red slippers, they were silver slippers. So that was the political environment in America before the Federal Reserve. It looks like we're heading right back there, and this is just political bribery. Everyone's going to do it. So Trump's doing it first,
Yeah.
but I anticipate anyone who has control over the purse of the Federal Reserve will spend more money.
Yeah. And what's particularly interesting about this, but also not surprising at all, is that a lot of Republican senators are calling this plan completely unrealistic or even insane. So, what does it tell you when a president's own party doesn't line up behind a big promise like this one? Is he losing the right?
No, I think much of what's going on with him, and he did the same with tariffs, right? So you just gave some data about the money, how much. There was a bunch of economists just the other day who actually signed off saying it was much more successful than they ever thought it was. Remember the amount of people that thought it was stupid a year ago compared to now? Maybe the number isn't right, but it's done a lot of good things. So again, Trump, because he's writing a new book on the credentialists and the know-it-alls who said you can't do this, because Trump can shake the box, because he is so different when it comes to these things. He's working with Besant. I'm pretty sure Besant has told him, yeah, we can do that. With all that Besant is doing, that if anyone says it's not possible, they're not really gauging the relationship that Trump is creating with the Federal Reserve. It's completely altering the mechanics of the Federal Reserve and executive branch dichotomy, how that works. And so what Besant is doing is basically trying to steal control of money printing from the Federal Reserve, in particular, steal control of interest rates. Trump can do this if he has the countries, the stablecoin operators in foreign countries creating a wider user base, spreading US dollar liquidity around the world, buying more treasury bills, and forcing that power into the treasury, not the Federal Reserve. Yeah, I believe he can do that at that point. I think it is mathematically possible. And we can't expect congressmen. I mean, most of them are pretty low IQ and pretty stupid and just there because they've got some niche. They know how to raise money. They're perpetually raising money for campaigning. They're not really thinking outside of the box. Any little stimulation that comes in affects them. And then even the job, I mean, the personal responsibility of a congressman, if you take away the Federal Reserve and you take away the bureaucracy that grew out of World War II, that's really what's removed accountability from these legislators. That's why they do omnibus bills that hides their responsibility each and every time. So if we can break their mold on omnibus, if we can break their mold, Republican and Democrat, to be more responsible, more accountable, more what they said they were going to be originally, representatives, not hiding behind a bureaucracy or hiding behind omnibus spending bills, then this is existentially threatening to them, right? This changes the calibration and configuration of government in the United States, which is a big deal for congressmen. So even Republican congressmen, I believe, are threatened. I mean, will they agree with term limits? I mean, Trump made promises about term limits many, many times. Are they going to vote for their own term limits? Of course not, right? So they're self-serving like others and underlining this, right? We can't imagine either Republican or Democrat congressional folks as being somehow noble and the executive branch isn't. They're all kind of on the take in their own way. They're all corrupt in their own way. And whatever ends up coming from congressmen standing up to the executive branch in this instance, I don't really think they have much of a moral high ground to stand up on, given the sort of oozy nature of their responsibility and slimy nature of their hiding behind bureaucracies and hiding behind omnibus spending. So you can never say, oh, you voted for that. Well, of course I voted for that. I needed the pork barrel money here. So we've got a lot of sickness in Congress anyway. So whatever they say, you gotta doubt them. I always flip now. This is what I've done from Donald Trump presidency to the Joe Biden presidency. The presumption of innocence, that's for us, that's for citizens. The government doesn't get
Right.
presumption of innocence. That's to create a power imbalance. To them, it should always be the presumption of guilt. They should have to prove they're innocent all the time. You should just assume they're scamming you, and they should prove their way out of
Right.
it. What? That's kind of the point of the imbalance of the presumption of innocence. It's not because it's a better idea, it's
Right.
because it's unfair with the size of the state. So an individual deserves the presumption of innocence. Them? No,
Hmm.
no. Presumption of guilt. Prove you're innocent.
Yeah.
So that's
No,
where
I
I come
feel
from
that.
on that.
That makes a lot of sense. Yeah, this whole thing to me, it just feels like a campaign promise that I think is just supposed to rally up the troops of MAGA, but we'll see because he's coming under a lot of fire recently, obviously with Epstein and the economy. So I don't know. I think this is a classic. Look over here, you're all getting $2,000 while I do a bunch of stuff in the shadows. But what do I know? All right, let's move on to the next one. Nolan, hang 10. We'll be back in a second because Adam Back, one of the OG cypherpunks, the guy who's literally quoted in the Bitcoin white paper, and someone who speaks about cryptography the way chefs speak about olive oil, says Bitcoin is not in danger from quantum computers for 20 to 40 years, meaning all the apocalyptic online threads predicting that some quantum machine is about to vaporize Bitcoin can just take a seat, drink some chamomile tea, and reconsider their hobbies for a second. Now, the whole debate kicked off because Shamith Palihapitiya said that quantum computing could break Bitcoin in 2 to 5 years, claiming it would take around 8,000 qubits to crack it open like a piñata. Adam Back politely responded by explaining that those 8,000 qubits would need to be logical qubits, the kind that actually work, not the noisy, error-ridden, temperamental toddler qubits we currently have. You see, right now, even the most advanced quantum systems don't come remotely close. Some machines boast a few thousand physical qubits, but when you account for error correction, you end up with a handful of usable logical qubits, like ordering a large pizza and receiving 2 crusts and a coupon for disappointment. Now, Back also pointed out that Bitcoin already has an NIST-approved post-quantum encryption options waiting in the wings, and switching to them would be far easier than the doomsdayers are actually claiming. All right, bringing Nolan back. Nolan, Adam Back says Bitcoin is safe from quantum computers for another 20 to 40 years, while Shamath says that we're 2 to 5 years away from disaster. For normal people out there, what's the simplest way to understand who's actually closer to reality right now? What do you think?
Great question. What Chamath is saying is the 2 to 5 year horizon makes it sound like it's an engineering problem. And all engineering problems really are just 2 to 5 years away. What Adam
Mm-hmm.
Back is saying, and I think he's correct, is that it's actually a science problem. They need a science breakthrough. And that's what Chamath is not saying. Engineering problems are not the same as science problems. Science problems means they could last forever. You might never come up with a solution because there is a blank in scaling quantum, exactly as we heard from Adam Back. That scaling, the qubits and how many and how far, we actually don't know. It's not in Moore's law anymore. If it was just a engineering problem, that's what microprocessors have been on until now, the Moore's law problem or the Moore's law
Mm-hmm.
trajectory, which is, it doubles every however many years, I forget. So the whole thing doubles. And
Mm-hmm.
that if you keep scaling quantum according to Moore's law, yeah, Chamath is right, but we're not in that world.
Mm-hmm.
We're not in the engineering trajectories. And to say that we're on an engineering trajectory for quantum computing means that you're not looking at the real problems that need to be solved. I think Adam Back is. The real problem that needs to be solved is we don't actually know. It's a science breakthrough. We're not
Right.
there. It's not there. And so it doesn't mean it couldn't be there. We could figure it out, but you're going to need another genius or someone who happens upon a discovery that changes everyone's mind. And now, I actually wrote a science fiction book about this many years ago
Oh.
called well, because you always heard this question in all the early Bitcoin, like what is Bitcoin meetups that I would go to, and everyone would say, well, what about quantum? And I had to look
Mm-hmm.
into it because this was already, I didn't know what the hell they were even talking about at first. I was like, okay, well, let's find out.
Yeah.
And that's the conclusion I arrived at, was that the science hadn't really been figured out yet. So you couldn't put it on an engineering trajectory. So already the outlook didn't make sense. And I went one step further. I had created a subatomic, so in my science fiction book called the Satoshi Wedding Murders. And the Satoshi
Yeah.
Wedding Murders is about a Satoshi wedding, so huge Satoshi holding families joining a wallet. And everybody in this world has an A eyeball, and the eyeball follows you around everywhere. And most of Bitcoin is scaled cognitively because of that. So we never did any on-chain scaling. It just the like rhinestones, the big stones,
Mm-hmm.
the eyeballs
Yeah.
kind of know who owes who what and figures it out. But a Satoshi wedding, because you're dealing, the only market which exists in this world is time for Bitcoin. And so people go to places to
Mm-hmm.
spend time and they can actually earn Bitcoin by spending time there. And so there's no murders on
Mm-hmm.
Earth basically in this future. And a Satoshi wedding is when these two families join the wallets, but they get a moment of privacy to consummate the marriage. And so there's no eyeball in the room. So the wedding, they join the wallet, but then the doors open and they're dead. And they don't really remember how to solve crimes anymore because it's like they just
Mm-hmm.
subpoena information from the eyeballs that spy on it. And it all came
Mm-hmm.
from my reflection about what we would have to do science-wise to stop quantum from computing from breaking Bitcoin. And the conclusion I came to, which is you probably have to talk the quantum computer into it. Like that's the science breakthrough
Oh,
that has to happen. Like it's not that simple as like we built the machine, it will do it. If you build it the way I
right.
had suggested in this, which is completely made up and not real, but to get over the Heisenberg uncertainty principle, to have electron both everywhere and one place, to create a subatomic circuit between the nucleus and the electron, which would break if you could build a processor like that, science fiction wise,
Mm-hmm.
but the science hasn't happened yet. You would get to get over the Heisenberg uncertainty principle. I made my AI quantum computers believe in God to get over, to have faith, basically. So that's how, I mean,
Mm-hmm.
we don't know what the science we're going to need to scale quantum computing is. And it could be something as ridiculous as it's sentient now and will need a moral justification for doing what you ask it to do. It's not just going to be like a little robot that you prompt and then it listens to you. It's going to have to be like, well,
Mm-hmm.
maybe, yeah, sure. Now, none of this is real, but what I mean is the science breakthrough that will come to quantum computing could be something so crazy as that. So it's almost impossible to put a timeline on it outside of that.
Mm-hmm. I'll be honest, the story actually makes me think that maybe your book was the influence for Sam Altman inventing WorldCoin, that weird eye thing. It's kind of sounding reminiscent of that. So maybe you should like put a lawsuit against him or something. I'm sure he'd settle and you could buy all the Satoshis you want.
Get
So one
my
last question
eyes.
about this one. Yeah, right. It's a little too Minority Report for my liking, but that movie's also incredible. So
One of the greatest
the
movies
one
ever
final
made.
question I have. Oh, freaking incredible. Last question I have about this one, really quick, Nolan. When people ask you, like, will quantum computers eventually kill Bitcoin? What's maybe like the most honest and simple answer you think you could give them today about that? Is down the horizon that still a threat? Or do you think that we're going to be able to keep up with the technology to make it so that Bitcoin is in fact quantum resistant when it needs to be?
Yeah, I tell them it doesn't. It's an adversarial environment. This would absolutely increase the tools of your adversary, increase the weapons of your adversary, but that Bitcoin
Mm-hmm.
still has protection against those weapons. It would require a small
Mm-hmm.
adjustment in how we use Bitcoin. It would leave certain coins vulnerable. I think that's what we saw with the Chinese social hack from
Mm-hmm.
last week when they got all that Bitcoin from that lady. That was one of these like not
Right.
randomized wallets that would have been quantum susceptible. So there's a portion of Bitcoin that would be susceptible to this for sure. But the tools are all there,
Mm-hmm.
even in the best case scenario of AI becoming an actual, or quantum computing becoming an actual weapon for adversaries who want to steal in the market, steal in the network. Then we have protection against those. But that I would also underline, I continuously underline that we're not dealing with just straight engineering the timeframes for quantum. Now, I understand your question was imagine it all happens and the scientific breakthrough comes through. We still have to steer
Yeah.
it back to the idea that there is they're missing a Beethoven, they're missing a Mozart here. You can't just go ahead
Mm-hmm.
and, you can't order a production line of quantum that can attack Bitcoin right now. There is no delivery, there is no time frame. Um, we don't even know if the person who's invented it is born yet. I mean, it's to that extent.
Right.
So I continue to say that even if it does come through, we have tools. It will affect a certain portion of Bitcoin. It could absolutely give Bitcoin to people who didn't work for it, who stole it, who are not, part of the early Bitcoin era that did all this. But that there's
Mm-hmm.
nothing fundamental and existential to worry about here. Even in the worst case scenario, it is some old coins that have never been moved that get stolen, and that's about it.
Whew, I think I felt a collective sigh of relief from everybody in the world right now. So we appreciate you breaking that down for us, Nolan. And while we're at it, we're talking about the future. We got one more story today, but it's part of our AI AIO segment. So let's run the stinger, guys, and get into it right now. All right, it's time for some AI AIO. Let's see what our robot overlords have in store for us today, because it looks like Waymo's Robotaxis are officially graduating from the kiddie lanes and are now heading straight onto freeways in San Francisco, Phoenix, and Los Angeles, because apparently the robots got bored terrorizing cul-de-sacs and wanted to try something with higher stakes. Can't wait. Now, this move means they can now offer curbside pickup at San Francisco Airport, which will thrill travelers who've always dreamed of being whisked away from SFO by a car with no driver and no emotional support if something goes sideways. Waymo claims freeway service could cut ride times by up to 50%, which makes sense. Robots don't get distracted, they don't take the wrong exit, and they don't suddenly decide they know a shortcut that adds 20 minutes to your trip. Waymo says this is just the beginning. The company plans to expand freeway service to Austin and Atlanta, and while they're at it, they're also expanding standard street robotaxi service across more of the Bay Area's peninsula, including San Jose, which means Silicon Valley engineers will soon get to experience the joy of being chauffeured by technology they may or may not have helped build. Now, if you forgot, Waymo is owned by Alphabet, the same parent company behind Google, Chrome, Android, and YouTube. So yeah, the same corporate hive mind that autoplays conspiracy videos at 3 a.m. is now steering cars down the freeway. Exciting stuff. Bringing Nolan back. Nolan, Waymo is sending robo-taxis onto freeways now. How big of a leap is that compared to the slower neighborhood testing that we've seen more recently?
Well, I think there's a bit of a first mover advantage here that's hard to underestimate in these robo taxis. Because if you like the whole thing, right, and it all works out, it seems to me one of those services, like Uber enjoyed in its early days. It's not like everyone was jumping over themselves to download another rideshare app. And Uber getting out first made it really hard for competitors. Now, once Uber service got not so great, I started looking into some others and things like that. But still, I kind of go back to the Uber every single time, and I let the other apps just go off my phone because I don't use them enough. So I really do think these robo-taxis have a first mover advantage that is different than we might have seen in the past with a lot of other apps. And so, again, if you like the service, I can't imagine why you download another app. And I can't imagine why you'd go through all the rigmarole of like, what other robo-taxi can I get today? So, maybe you like the fleet of cars different. I don't know. But first mover, I think, is everything here. So seeing them do it, I was amazed by just seeing them in the springtime when I was in San Francisco, just moving around on the roads. And I thought they were so cool to see and look at. And now that they're everywhere, I can't wait to use them. So I'm a fan.
Yeah, like you said with Uber, the first mover advantage there was so big, Uber became a verb unto itself, or I guess it'd be now, like, go get me an Uber, right? Or I'm gonna just Uber over there. So that in itself, just kind of integrating itself into everybody's everyday lexicon is such a big thing. Like, why would anybody care about the next one? Because you like Elon more or something? I don't know. But, these cars have logged millions and millions of test miles and even published peer-reviewed data showing that they avoid crashes better than humans. So I guess my question is, does this feel like that moment that robo-taxis actually start going mainstream rather than just being this thing we talk about in the future?
I would say it's the start, but the moment will be when your own insurance becomes way cheaper because you have the driver assist with Tesla or another one of those. And those actuarial numbers are becoming available. I saw this week that Tesla was celebrating the number of Americans that are still alive because it's been enough months now where the self-driving system has been in place. They take the average number of deaths per miles driven of their fleet, and then they say, this is the average American death rate for driving, and now this is what it is with the Tesla cars. And I think they came up with like 80 people since it started would be dead if it was the same death rate, that the same mortality rate that happened with cars you drive
Wow.
yourself. So ultimately, insurance
Hmm.
companies are going to be the big deciders. And insurance companies, the minute you get a reduced rate because you have this engaged in your car. It was a little bit like what they tried. Remember with the speed gauges? Remember they tried speed gauging the insurance companies and brakes, right? They put these
Yeah.
little monitors in your car, and if you agreed to the monitor, you got a rebate in your insurance.
Hmm.
And it never really took off because people didn't want to tell the truth about their braking rate and all that. They paid the extra insurance
Hmm.
just to have we like to break rules. No one likes to get caught breaking rules, right? We all like to break rules a little bit,
Right.
and it's just human nature. So that tech was like tattletale and we didn't like it. But self-driving
Yeah.
is not that tattletale. It's a different psychological frame. And if you just save money
Hmm.
because you let someone else do the work, it's not the same as like, oh, look, I cheated on my speed in a school zone or something. So it's a
Hmm.
different psychological frame, and I imagine way more conducive to people jumping into the service to save money. So to me, that'll be the day. And the robo taxis are going to be to help normalize it because you don't go out and buy a self-driving car without understanding that it actually works. Like you've got to sit in the car, but from what I understand, one trip is all it takes to convince people that it's good. I've never done it, so I don't know. I haven't driven in a robo taxi of any kind without a human driver. I've been in the Tesla with the driver
Right.
assist, but I haven't been in a no driver car yet. But I heard it
Yeah.
takes seconds to get over. Like a couple of red lights
Yeah.
and one merge, and you're just like, oh, this is fine. And then you're back to scrolling, and the whole novelty is over.
Yeah.
Um, so I think insurance in the end will be the big signal. We're not quite there.
Yeah, I've seen enough of those things log jam traffic here in San Francisco that I'm like not too bullish on going, taking one of those yet. But I think that is the future of where we're going. Yeah, they're always just a nightmare. Also, we got to get going here in a sec. But I do think it's going to be an interesting point because you're like, well, deaths will go down dramatically from car accidents. But then when a car accident inevitably happens, then it kind of becomes like, who do you blame? I don't know. So there's some interesting things that they're going to have to figure out there. And I think we might be further away from a fully integrated network of
Oh,
robo-taxis akin to like a Minority Report. But we'll
well,
see how it plays out. All right, go really quick, Nolan, and we got to finish up.
yeah. I think that's a big question because it is insurance when it comes to like, was it the firmware? Was it the hardware? Was it the manufacturer? Who's responsible if you're not legally responsible? And inevitably, it does get into
Hmm.
cryptographic signatures and it does get into the authentication side that we've learned about in Bitcoin, where I do believe they're going to have to push tokens to each other in all kinds of instances when all these different firmware, software, hardware interact inside of the vehicle so that we can do a
Hmm.
forensic audit of responsibility to find out where in the car responsibility lies with accidents and death.
Right.
Very complicated business, though. Absolutely.
Very. Better for
Yeah.
other people. I don't want to touch it. But either way, I'm excited for the future. And we're always excited to have you on the show, Nolan. You're the best. And you, of course, have your amazing show, The Great Awakening, that's on before this. So just wake up a little earlier, gang, and make sure to check Nolan out. It's an incredible show, and you'll learn a lot. Nolan, it's always an absolute pleasure having you on the show. Thanks so much for joining us this morning.
I love being here, Hank. I can't wait to be here again. See you Thursday, my man.
Man after my own heart. Appreciate it, Nolan. We're taking a quick break here at the Blockchain Report, but when we're back, we got our next two special guests of the day, and you are not going to want to miss it. So stay tuned. Blockchain Report's coming right back after this.
Matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, welcome back. It's time for more of this morning's bull run. And in case you haven't been paying attention, Bitcoin dropped below 90K yesterday, its lowest point in more than 6 months, reminding everyone that volatility still exists when number has mostly been going up. Analysts blame the drop on the holy trio: profit taking, shrinking liquidity, and macroeconomic pressure. BitBull Capital says long-term holders have been selling into strength and liquidity has dried up, meaning even medium-sized sell orders now hit the market like a truck. Tighter financial conditions and rising credit concerns have pushed investors out of higher beta assets. And yes, that includes Bitcoin and is still considered a higher beta asset no matter how many times we yell digital gold into the void. Now, some analysts are warning that Western governments are running huge deficits while the stock market depends heavily on AI-exposed companies. About 40% of the S&P 500, which is only a tiny bit terrifying. Now, if the AI boom requires massive credit financing before revenue actually arrives, that pressure spills into every risk asset, including Bitcoin. So BTC dipping to 90K isn't some catastrophic collapse. It's a combination of macro stress, weak liquidity, de-risking, and whales cashing out. And joining us today to talk about this and a couple of other stories, we got Anton Bozov from Xapo Bank and Sam Callahan from Orange BTC. Gentlemen, welcome back to the show. Great to see you both this morning. How are you?
Back on.
Excited to be back.
Yes, excited to have you both here. I hope you've been doing well. I want to get right into it. Sam, let's start with you this morning. When Bitcoin suddenly drops below 90K, a lot of people are starting to panic. Based on what we're seeing now, does this look like normal market behavior or is something deeper happening underneath the surface?
Yeah, well, thanks for having me back on. And yeah, it's pretty par for the course for Bitcoin to have corrections of 25 to 30% during any kind of bull market. The last time this happened was during the tariff announcements back in spring. So this is kind of par for the course. Sentiment's in the gutter right now, I understand. But for long-term investors, this is actually a buying opportunity. And, under the surface, we have been seeing some long-term sellers taking profits. But that's also normal during bull runs. And the people buying them, that's the difference. Because instead of other retail investors buying, we have institutions, we have governments, we have sovereign wealth funds, pension funds. And so this is the asset maturing. We're going to see this distribution happen. But long term, if you look at the macro picture and global liquidity conditions, there's every reason in the world to be bullish on Bitcoin's long-term value proposition as a hard, scarce asset in a world of high fiscal deficits and persistent currency debasement. And so nothing's really changed. The governments are still going to print money. Bitcoin, there's still only 21 million that's ever going to exist in the world. So I think now's a pretty good time to pick some up if you believe in that.
Yeah. And Anton, for you, Bitcoin's down about 25%. We've seen much bigger corrections in the past before, yet everybody is freaking out. The fear and greed index, I think, was at like 10 this morning. Do you think that this recent pullback is kind of indicative of the different playing field Bitcoin is on now, especially with all the institutional money jumping into the market in the last year and a half?
I think, Hank, it's very normal. What's happening right now, it's a structural reform on the Bitcoin. Did you see what happened a few days ago from Galaxy? They announced that they sold $9 billion in Bitcoin for only one customer. $9 billion. Now
Whoa.
Imagine this person trying to sell their holdings 10 years ago when the Bitcoin was below 1,000. It's impossible. This liquidity didn't exist before. So right now, those OGs are selling. And someone made a very good comparison. It feels like right now, Bitcoin is on his IPO moment, where the OG, the early investors right now are redistributing their holdings to the institutions that are also long-term holders. So yeah, we are in the Bitcoin IPO moment, and that's very normal. And I think this is extremely bullish for everyone right now. I cannot be more excited.
Yeah, no, I would have to. Yeah, people have been riding the Bitcoin wave for a while, and life happens. You need money, and some people got to cash out, but it looks like they're cashing out directly into the hands of institutions. But with that being said, and Sam, this one will be for you. Some analysts right now are saying that Americans have kind of pulled back. We're seeing ETF outflows, lower demand, even a negative Coinbase premium. How much do you think U.S. sentiment matters in a global market now dominated by institutions?
Well, the US is still the leader in Bitcoin in pretty much every metric that I see. So in terms of mining, in terms of the companies that lead in the industry, in terms of the infrastructure, in terms of the liquidity, in terms of the usage, Bitcoin America has been a leader in Bitcoin. And so they still are a leader. They still influence things. I reject the idea that they're taking a step back. I feel like we're leaning in hard. And the only thing that's taking a step back is the price. So the fundamentals continue to improve. We just saw Harvard triple down with their endowment on Bitcoin. And so IBIT's now their number one U.S. equity position in their entire portfolio. And so that's a signpost.
Yeah.
You saw sovereign wealth funds. So, America is leaning in. We're working on a Clarity Act now. And I think that's going to get done maybe probably longer than people think, but eventually I think it'll get done. And that'll even provide more regulatory clarity for more people to get in. But a lot of Americans, their wealth is managed by financial advisors, and that's just the reality of how the markets are structured today. And those RIAs, those large firms, they're still like seeing how these ETFs are trading, seeing how Bitcoin's fitting in portfolios. It takes them a long time to allocate to a new asset class. But we've seen in the last 12 months, we do have the liquidity now. We do have the regulatory clarity. We do have it's the custody solutions available to them where they can feel comfortable allocating their clients' assets to this. And I think that just takes time. I think Americans and maybe all people are very impatient these days. But the key is just to be patient.
Yeah, no, Sam, those are all really good points. It's like if you look at the underlying narratives in the Bitcoin space, there's a lot of really bullish news there, but it kind of feels like maybe Bitcoin's getting dragged into a lot of the macro chaos we're seeing right now. So I think you're totally right. Just the only thing that's down or taking a step back is the price right now, but we've seen this from Bitcoin before. So like you said earlier, this is just kind of par for the course. We'll move on to the next story, guys, here. As ARK Invest says that Bitcoin's ownership base is basically going through puberty, awkward, dramatic, and full of big changes. They are calling 2025 a battle between early adopters and institutions, which is finance speak for the OGs are selling and Wall Street is buying everything not nailed down. Now, long-term holders have been taking profits, and Bitcoin's liveliness metric, which rises when old coins finally move, is now 0.89. That's the highest level we've seen since 2018. That means wallets untouched since the Obama administration are finally waking up. Now, ARK says it's a structural transfer of supply, and the macro backdrop matters here. Institutional appetite depends heavily on dollar liquidity and interest rates. If tightening ends and rates fall, ARK expects ETFs and corporations to keep stacking. The big takeaway here, if liquidity improves, institutional buyers could keep overpowering early adopter sellers, which could quietly extend this bull run into 2026 without needing Michael Saylor to personally intervene. This next one, Anton. ARK says that Bitcoin is going through a major shift. Early adopters are selling, institutions are buying everything. How big of a change is this for Bitcoin's long-term story?
Actually, it's not changing a lot, Hank, because at the end, investors are still stacking Bitcoin. Yes, some OGs are selling, but I can assure you that selling all of their Bitcoins. And Hank, also, the beauty of Bitcoin is that you can see everything on-chain. And what's happening right now, approximately $2 billion are sold pretty much every day from OGs. That's clearly the on-chain data. And the beauty of the entire situation is that this has been consumed quite well from institutions, from ETFs, and from Bitcoin treasury companies. The fact that we have these unbelievable sell volumes happening every day, and the fact that we were not that low from the high, like 20% correction, is pretty much very normal for the Bitcoin. And I can tell you that this sell pressure will stop at some point, and the investors right now that are acquiring those Bitcoins, they're here for the long game, and they will not sell any moment soon. So that's what I told you earlier. We are in this Bitcoin IPO moment where the new investors are here to stay. And this structural transfer, yes, I agree, it's happening, but at the end, it's bullish because you don't have speculators here. Those new buyers, they're not here to speculate and sell tomorrow or next month. They're here for a very, very long game, and that's why I'm saying having Bitcoin in long term is the great, probably the best investment, and nothing is really, really changing for people who believe in the Bitcoin revolution, I'd say.
Yeah, no, that makes sense. We've seen a lot of institutional action in the last year and a half. In fact, institutions now hold more than 2.3 million Bitcoin through ETFs and corporate treasuries. So, Sam, how does this change the way Bitcoin behaves during bull and bear markets? Are we currently seeing it right now with this 25% drawdown as opposed to some of the bigger ones we've seen in the past?
Yeah, I think that's kind of what I expect to happen in terms of the behavior of the asset. When the investor base changes to a more retail to institutional, there's professionals, and so they do hedging strategies. they also do rebalancing when it goes up and down. So the effect is that it typically dampens volatility. And so even this year, the last year, Bitcoin was less volatile than Nvidia and Tesla, and it was almost
Yeah.
2-3 times more liquid of an asset because it's a globally traded 24/7 asset. And so it's always going to be very volatile, but it's very, very liquid. And so it's usually the first thing that sniffs out when something's going to happen in terms of liquidity conditions, macro. You kind of saw that the last 2 weeks when Bitcoin sold off before stocks started to crash. And so in a lot of ways, Bitcoin won't be changed at all from the institutional adoption, but its price behavior, I think will as it matures. And I think that's a very normal thing. And I think when these early investors start to sell, I don't see it as a sign like, hey, they've lost faith in Bitcoin long term. It's actually that they benefited from being early adopters, and Bitcoin's working as money. It's supposed to preserve value and purchasing power over time. And as Anton said, when one holder has $8 billion, that's because Bitcoin, he made the right decision. He held on to it, and Bitcoin worked as money, and he benefited from it. We don't value money for money itself, but for its prospective exchange utility, basically to buy us things in the future that we want. And that's just the nature of money and the nature of humans. And so it's diversification. It's people maybe going on that trip and living their lives, buying the college education for their kids. I mean, it's very normal behavior. And so I don't really see it as a negative. I see it as a positive and actually a validation that Bitcoin's working as intended as the best way to preserve value over the long term.
Yeah, no, it definitely seems like we're seeing Bitcoin kind of mature in front of our eyes right now. And Anton, ARK is saying this whole trend depends heavily on liquidity rates, or interest rates, and liquidity. So if the Fed starts cutting rates again, do you think institutions are going to start buying even more aggressively than we're seeing right now?
Absolutely. Right now, there is this risk of sentiment, which also was visible from the tech stocks. They're very down in the past few days. Investors are assuming the trades as they said they would. So this is one of the reasons why we have this Bitcoin. One of the reasons why we have this Bitcoin price decline. But Hank, if we see what happened in 2018, I see, generally speaking, crypto looks like a scam, and this caused the bear market. 2020, we had COVID, massive event. 2023, we had the FTX crash, again, like a massive event. What happened now? Nothing, like literally nothing. You don't have the driver to enter a bear market. So this is like a very normal correction. I'm sure it will happen again. And if someone cannot survive 25% correction, then you're not in the right place. So, yeah.
Right. No, that makes a lot of sense. And, we are seeing this big transfer right now, as we spoke of earlier, from early holders who are finally cashing out to institutions. Now, if this transfer were to continue, Sam, what kind of market do you think that creates in 2026 and beyond for Bitcoin? Are we looking at a more stable, slow up and to the right, or could it be more explosive, something in between? Where do you think we're headed next?
Well, it's important to note that global liquidity conditions are the long-term driver of not just Bitcoin, but all asset prices. But Bitcoin's the most sensitive to the liquidity conditions. And so we have these supply side dynamics occurring right now, but eventually there will be seller exhaustion and the distribution will happen. And then liquidity will continue to be the driver of the long-term price action. And so I expect this to play out over the next few months. But at the same time, when you look at what's going on the liquidity side of things, there are signs that there's some cracks starting to happen, and the Federal Reserve and the government starting to move some chess pieces around to try to provide more liquidity to the system. You see that with the way that they're thinking about changing the bank requirements. You see that with the Fed ending QT next month and starting to reinvest into T-bills when the bonds mature off their balance sheet. And that provides liquidity to the system. And you see some of these dynamics, you saw the spreads between the bank funding rates are starting to spike, and there's concerns. And I think like Donald Trump called a meeting with some of the, Jamie Dimons of the world, Steven Schwartzmans of the world, and they got together and they said, hey, we're worried about the cost of living here. What can we do? But I think behind closed doors, it was also about, hey, what's going on with the liquidity conditions? Because if we have to return back to easy monetary policy and inflation rates still at 3% CPI, and the Americans are already struggling with the cost of living, how do we manage this? Because we have to provide liquidity to the system. We can't let things crash because debt's at 38 trillion and we need to run $2 trillion deficits. But we have a cost of living crisis and we don't want people with pitchforks in the street. So what can we do? There's talks of $2,000 stimulus checks. There's 30, 50-year mortgages. They're trying to figure out how to keep the system afloat. And for Bitcoiners and maybe gold bugs, we know where this is headed, which is currency debasement. And so they can try to play these games and try to delay things and toggle some switches, but we know what's ultimately going to happen. And they're going to provide liquidity. They're going to try to keep the system afloat. They're going to abandon their the price stability mandate. Once again, cost of living is going to continue to be high. And as cost of living is high, Americans will continue to struggle and they'll seek alternatives naturally to preserve their wealth. And so long-term Bitcoin, like over the next 3, 6, 8 months, it depends on liquidity, but I see that increasing. And in that environment, since Bitcoin's so scarce, we can't see an explosive move upwards. It would be actually abnormal for Bitcoin to just grind upwards. That would be the weirder thing to happen when you look at Bitcoin's historical price action. So expect anything, but really the long-term value proposition, it's not changed at all.
Okay, yeah, no, I'm glad to hear that. And I know you and I are going to get in a little bit deeper about the liquidity situation in a bit, so I'm excited to talk about that. But we're going to move on to our next story now about El Salvador, because they just picked up another just under 1,100 more Bitcoin worth about $100 million, because apparently dollar cost averaging is now a national policy. And honestly, respect. I mean, Bitcoin slipped and El Salvador said, we'll just take the whole tray. Now, the nation has had Bitcoin as legal tender since back in 2021, and their entire strategy seems to be when the market dips, buy more. When it pumps, also buy more. And when people say it's risky, let's just buy even more. Their latest purchase brings their total stash to just under 7,500 BTC, valued at roughly 688 million. And moves like this strengthen the narrative that Bitcoin is evolving from weird internet money to an asset gobbled up by governments who want to escape hatch from the dollar dependence. And the more countries that follow El Salvador's buy the dip forever strategy, the more structural demand you get supporting the price long term. So yeah, the chart might be bleeding today, but a country is literally looking at that and going, thank you for the discount. And if that doesn't tell you where this is all headed, well, I don't think anything will. Bring in my two friends back. Anton, this one's for you. El Salvador brought over 1,000 Bitcoin during the dip. That's more than $100 million worth. What do you make of a country treating every dip like a buying opportunity?
El Salvador is giving example to other countries what they also should do, and I'm sure they are taking notes. See, Hank, it's taking a lot of time for others to really understand the value of Bitcoin, especially if you're speaking on a national level. There are a lot of policy happening on different countries. I can see also here in Europe, you have some countries like, for example, in Romania, which this has been broadly discussed, but someone needs to press the button and say, yes, we're going to copy El Salvador. The El Salvador, they're just very lucky to have their president, because what they're doing, this is like actually a long-term strategy. See, they managed to attract a lot of Bitcoiners, a lot of digital nomads moving to there, and also at some really good companies, like you can see Tether, the most profitable company in terms of employees versus income. They opened their headquarters in El Salvador. So this is actually a much bigger strategy than just buying Bitcoin and holding it. And it's like what I'm seeing. It's going to take time, but they're the first one, but they're not going to be the last nation in the world to do this one.
Yeah. It's certainly seeming like just seeing someone else do it, nobody wants to be the first, right? So it almost kind of gives permission to other countries, maybe of a similar size, to be like, hey, maybe we should join in on this party too. And so, it might be that the catalyst for that. And Sam, one thing that's interesting about this is, I could have swore that El Salvador made a deal with the IMF this year after, I think, getting a loan or something, where they weren't going to buy more Bitcoin. But it would seem like a move like this is directly challenging the IMF and traditional financial systems. So do you think more countries might eventually follow El Salvador's lead, even if it's kind of quietly behind the scenes?
Absolutely. I mean, there's no doubt about it, because every single country suffers the same problem, which is currency debasement, which is how do you preserve wealth over the long term? And how do I seek a neutral, apolitical reserve asset, other than gold? What do you really have? You have Bitcoin. And so I agree with what Anton said. El Salvador is very different though. They're like embracing Bitcoin from like a cultural perspective and teaching and
Right.
education and trying to rally behind Bitcoin rather than just like diversify reserves. And that's a very special thing that's happening down there. And I hope more countries replicate that because as we know from like an individual perspective or even a corporation, Bitcoin can transform a person, a household, a corporation, as well as an entire nation, as El Salvador is showing us. But in terms of the IMF, I mean, the IMF is basically monetary colonialism, creating uh, debt slaves of countries for decades and decades and decades. I did a lot of work researching this stuff. And so, of course, the IMF doesn't like this because it allows the country to take back their sovereignty. And that's one of my biggest gripes with the IMF is they infringe on the sovereignty of nations and tell them what to do from an economic policy standpoint and really give them a lot of bad debt that they have over their heads for decades that slows their way to grow into prosperity. And so Bitcoin is a way for them to opt out of that IMF cycle. And so it'll take time for countries to wake up to even how Bitcoin does that. But El Salvador is a shining light of an example of how they can do that. So I don't really know the specifics. There's a lot of rumors about the IMF restricting them from buying it, but then they were still stacking. And there's a lot of rumors of how that was happening and whether that was even true. And so I'm not really sure about the specifics there, but it's really good to see them having the conviction to continue to buy and say, hey, no, we're a sovereign nation. We can do what we want with our tax revenues, and we choose to buy Bitcoin with it.
Yeah, no, that makes a lot of sense. I mean, now they hold like 7,400 Bitcoin. And Anton, from a banking and treasury perspective, what does it mean for a nation to build reserves in Bitcoin instead of traditional assets?
It's giving opportunity for this nation to ensure their national currency is going to be fully protected against inflation, to be fully protected against debasement. So I think this is one of the next logical steps for El Salvador, just to connect their national currency to be linked to the Bitcoin. I know this is a massive one and is going to require some structural changes on their end, but I think this is coming. And I bet this will happen in the next few years. But from the bank point of view, Hank, we have discussions. I cannot provide the full story, but we have discussions with some other countries that are interested in also storing Bitcoin and having banks having Bitcoins there. And if we wait a few months, I'm sure the news are coming.
Yeah, no, that definitely seems to be the way it's going. We don't know officially, but unofficially, I think we all kind of do. And officially, though, I want to say, Anton, it's always a pleasure having you here on the Blockchain Report. Thank you so much for joining us today. And if people want to learn more about you or what you and the team at Xapo are up to, where can I send them?
Please send them to X, where they can find my profile. And Hank, it was a pleasure. And hopefully, see you soon. Thanks, Sam. Thanks, Hank.
Yeah,
bye-bye.
Pleasure's all mine. All right, now we're getting into our deep dive with Sam. So guys, let's roll the stingers and get into it. All right, now it's time for our deep dive with Sam Callahan. We got a lot to talk about with you, Sam. A lot of time has passed since we had you on the show, but the first thing I want to jump into is you had a really interesting tweet that recently came out, and I want to talk about that because in your tweet, you said that people were overfitting the relationship between Bitcoin and global M2. So for viewers out there who don't follow macro charts every day, can you explain what overfitting means in this context and why it leads people to the wrong conclusions about Bitcoin?
Yeah, overfitting. So, look, there's a broad macro relationship between global M2 and global liquidity and Bitcoin. We kind of talked about this earlier in the show, right? The problem is it's a broad relationship that changes. And I noted when I did a report with Lynn Alden that correlation can diverge multiple times when there's large events that happen to Bitcoin itself. Right. So you have the broad macro liquidity, but then you have Bitcoin itself. And so a perfect example was during the FTX collapse. that was unique to Bitcoin. It didn't matter if the Fed was cutting rates or hiking rates. Bitcoin was tanking because there was industry-specific events happening that override the liquidity conditions. Another one was the launch of the spot Bitcoin ETFs, a more positive one, where that opened up access to this new industry. A lot of money flowed in there. That was unique to Bitcoin. So it didn't matter really what liquidity was doing then. Bitcoin was going to rally pretty hard. And so there are moments when it diverges. The problem with overfitting, people were taking that broad relationship and saying, well, global liquidity is up like this, and it's typically like a 10-month lag between Bitcoin. And so why isn't Bitcoin catching up to global liquidity? It's about to spike and all these, they're trying to turn it into like a precise timing indicator instead of just a broad global macro relationship to learn from. So like, it's more about the environment that you're in of when liquidity conditions are very good and they're easing. It's more likely that Bitcoin's going to be rallying during the period based on its historical price action. It doesn't mean that like because global liquidity went up like this, that Bitcoin's going to go up like that. And then there's also these different dynamics between how global M2 is reported. A lot of times it's reported on like a quarterly basis in some countries, and it's monthly in others, and where Bitcoin is priced every single minute, right? So it's overfitting that relationship. And so that's why a lot of people were disappointed, because they were looking at a global M2 and they were like, hey, Bitcoin's going to rip because look at global M2, but it's just like you're overfitting it, if that makes sense.
Yeah, no, I think I'm starting to get this a little bit. And, some analysts are saying that the correlation you speak of is quote unquote broken, but you push back on that idea. So my question is, like, what signs do you look for to determine whether a macro relationship is truly failing versus simply going through a normal divergence?
Well, if this continued for a long period of time, where global M2 just went straight up and then Bitcoin lagged below for years, then yeah, I would have to revisit my thesis and say, hey, this relationship isn't working or isn't what I thought it was. But that's really not what's occurring now. It's just like a short-term divergence, which is pretty normal. Like I said before, there's other periods where it's happened, but generally, Bitcoin does well when the governments and central banks are providing liquidity to the system, and that just makes sense. It's the cleanest way to express currency debasement. If you're a money manager, or if you're an investor, and you say, hey, I think they're going to keep printing money, Bitcoin's like probably the purest way to play that. And that's what the data shows. Now, if that changed and it was like years where they were printing money and then Bitcoin was doing nothing, then I would be like, okay, something's going on. Like something either happened with Bitcoin or something happened where that relationship has changed. And I would have to kind of investigate it.
Yeah, that's fair. And, if someone wanted to understand better how macro liquidity actually influences Bitcoin without falling into these kind of timing trap models, what frameworks or signals do you personally find the most useful today?
Well, the frameworks in terms of just how liquidity drives Bitcoin's price, is that what you're asking? So
Yeah,
generally speaking, like risk assets perceived as like risk assets are more correlated with liquidity conditions. And so today, I think Bitcoin has safe haven characteristics and people are waking up to that, but it's broadly still seen as a risk on asset. And so typically equities, Bitcoin, more risk on assets do well in pro liquidity environments. And now if you think about what happens when liquidity gets pulled from the system, people flee to safety, right? They flee to the dollar, right? Historically, or to bonds, or even to gold. And so they don't have as pure of a relationship with liquidity as Bitcoin for that reason. And they also, like US equities, yes, they're risk on, but there's also like there's structural buying with US equities through like passive flows. So like 401ks and retirement accounts. And so even when liquidity is getting pulled out of the system, those passive funds are still buying equities. So they're not as tightly correlated to liquidity either, because they have that passive bid even in the downturns. And then gold is kind of both. Gold is seen as like a scarce asset and a debasement hedge, just like Bitcoin, but it's also kind of seen more as a safe haven. It has thousands of years to back that up. And so investors kind of flee to gold in when liquidity gets pulled from the system. And so again, it's kind of inversely correlated to liquidity that way. But Bitcoin right now, if liquidity is going up, it tends to go up. If it goes down, it tends to go down. And that's just the dynamics at play. Whereas gold liquidity relationship's more mixed, Bitcoin's is more pure. And so that's why I say it's the best global barometer of liquidity conditions. Hopefully that answered your question.
Nice. Yeah, no, I appreciate you explaining that from my tiny mind. I'm not into this part as much as you guys, so it's really good to hear it from the horse's mouth so I can help try to grasp my small brain around that. Now, I want to switch gears a little bit, Sam. You have had a recent change that I would love to talk about. You already have had a pretty impressive career journey, doing deep research at Swan, moving through roles in finance at Battery, and now you're running Bitcoin strategy and research at Orange BTC. I gotta ask, what made you feel like now is the right moment to take on this new role?
Well, it comes down to the fact that I was really inspired by what Michael Saylor and Strategy were doing in terms of the business model of a Bitcoin treasury company. Really, when you break down what a Bitcoin treasury company is doing is public companies have better access to debt. And that's just a function of the system. Whereas like if I'm Apple and I have a huge balance sheet and I can get better terms from a bank, I can get like really low cost, long duration debt. If I'm like a person, I can't do that. But corporations are closer to the money printer, and so they get better terms. And so the same thing with a Bitcoin treasury company, since we have a large balance sheet of Bitcoin, we can also raise capital that's very long duration, low cost, and buy more Bitcoin with it. And so it's almost a way to both provide leverage exposure to Bitcoin in the public markets, but also improve accessibility to Bitcoin because there's large institutional investors, large pools of capital that just can't buy spot Bitcoin. Even if they wanted to, they just can't. There's investment mandates, there's regulatory restrictions, and we're talking about like almost $100 trillion that can't buy spot Bitcoin. But they can buy Bitcoin-backed securities, right? They can buy debt, they can buy equities. And so that exists in Brazil. So Orange BTC is the largest Bitcoin treasury company in Latin America. We're listed on B3 in Brazil. And those dynamics exist in Brazil where there's pension funds, insurance companies. They simply can't buy spot Bitcoin, but they could buy a domestic equity like OBTC3. And so there's a lot of opportunity there. And so there's opportunity also in Latin America just to teach people about Bitcoin. We talk about currency debasement a lot on this show. Well, Latin America knows a lot about currency debasement, and they have a lot of unstable currencies, and it's almost troubling, and they need solutions. And the education level around Bitcoin there, I'd say, is a few years behind maybe the United States. And so there's a huge opportunity there to be a leader in that region when it comes to being a Bitcoin-focused public company that's providing education as well as improving accessibility there. And that's our goal at Orange BTC.
Nice. Well, it sounds like a hand-to-glove fit given your experience. And just so I'm getting this right, is it Orange BTC? Because I've been saying Orange. I thought it was like the Spanish pronunciation. I just want to make sure I'm saying it right.
It's Orange BTC, but you're not the first to do it, so don't feel bad.
Okay. All right. I appreciate the leniency of that one. But like I was saying, seems like a great fit for you. I mean, you've spent more than, 3 years at Swan. You went from Bitcoin analyst to lead analyst to senior analyst, and you're hosting Swan Signal Live. How did that experience shape the way you think about Bitcoin strategy today, and how does that feed into the work you're doing at Orange BTC?
Well, it was a great experience. I mean, we saw a lot of growth there, and my job there primarily was to teach about Bitcoin, to teach our private clients and our institutional clients about what Bitcoin is. Back in 2020, 2021, 2022, again, that was 3-4 years ago. The amount of educational resources and the general understanding of Bitcoin today is like night and day compared to then. So, it taught me a lot about how to explain Bitcoin to people, how to meet people where they are, obviously writing and speaking and all these things. So I take a lot of what I learned at Swan and I apply it here. And then, it's just kind of taking that and then moving now to the public markets. And there's a lot of differences between a private company and a public company that you learn, but it's the same thing, which is like, we are just driving Bitcoin adoption. It's, I've had the same mission. I changed careers to work in Bitcoin. It's always about Bitcoin. Like I want more people to understand it. I want more people to own it. I want more people to protect themselves with it because I really believe that is the best way to preserve wealth long term. And I still think it's very early. And it just shows, and like my work kind of shows that because people still don't understand it. And so I'm just doing what I can. I'm just with my skills to drive Bitcoin adoption forward and playing that small part. And it's what keeps me going. That's the mission.
Yeah, I love that. And it's so important in this space, as you and I know, to have educational stewards helping drive the information amongst the masses so people can understand this better. Because as I've seen time and again, I've had hundreds of people on this show, and it's always the same story. I thought it was a scam. I stayed away from it for a while. Then I did the research. I educated myself, and now I'm all in. So it's so important that we have people who are helping other people navigate that change of thought, because it really is. It's not just, I don't believe in the dollar anymore. It's just like a fundamental change in people's mind shift. And, before joining Orange, you had a stint running as vice president at Battery Finance. So my question to you is kind of along the lines I mentioned earlier, like what did you learn from that traditional finance environment that you felt was important to bring back into a Bitcoin only company?
Well, I mean, Battery, Andrew Hones, he's just a brilliant guy. And so what we're doing there is building Bitcoin structured products, combining traditional credit assets with Bitcoin.
Yeah.
And so you can kind of see that there are some similarities between what Michael Saylor is doing with the preferreds and what they're doing at Battery. It's such an early days when it comes to Bitcoin-backed credit products. And the opportunity there is immense because some people, like I said, there's the investment mandates and the restrictions that prevent people from owning spot Bitcoin. But some people just want certain things, right? They want a little income, right? They want a little downside protection. They don't want like the entire vol. Like they want a piece of real estate, but they also want Bitcoin involved with it too. And so if you combine the two, it makes the economics really interesting for the lender and the borrower because you're adding this diversified piece of collateral that is fungible, that's liquid. Like, when you try to sell a piece of real estate, it takes a long time. It's illiquid. You got to find a buyer for that exact property. It's not like you can sell off a piece of the property, but when you have Bitcoin combined with it, it makes it really interesting. So, the things I learned at Battery is how the institutional investor thinks, how to meet their needs, and how Bitcoin can be combined in these structured products to make really, really enticing, financial products for these institutional investors. And so I'm applying what I learned there at Orange as well. So, both of my stops really have taught me skills and experience that do me well at Orange.
Yeah, no, that's super cool to hear. I mean, we're seeing a lot of these kind of Bitcoin Frankenstein's monsters products of traditional financial systems and Bitcoin getting integrated together. The one that comes to mind is, I'm sure you're familiar with, like Cardone Capital is doing that with these large 300 unit buildings, and they're also attaching like tens of millions of dollars of Bitcoin to it as well. And I had a chance to talk to Grant about that, so it seems along those lines. And Orange hired you as director, as we mentioned, of Bitcoin strategy and research. It's a big, high impact position. So what's the mission you were brought in to execute at Orange, and what does success look like for you inside the company moving forward?
Well, we're a Bitcoin focused company, and we're on the Bitcoin standard. So like we measure all of our KPIs in Bitcoin terms. Bitcoin is our unit of account. So, we're measuring our success based on metrics like Bitcoin per share and Bitcoin yield. How can we accumulate more Bitcoin on behalf of our shareholders in an accretive way? And so that's my number one measurement. The other one's more anecdotal, which is just like, are we driving Bitcoin adoption in Brazil and Latin America? Like, is the education getting better? Are the resources getting better? And that's why there's like two strategies, which is like a director of strategy, or two titles, director of strategy and research, because I'm kind of doing the education side of things, but then actually working with our treasury team. How do we generate more Bitcoin for our shareholders? How do we acquire more Bitcoin for our shareholders? How do we, are there different yield strategies that we can do? And so it's kind of the treasury operation side of things, and then the education and research side of things that we're focused on. And we measure everything in Bitcoin terms.
And, with this new role, it sounds like it involves you helping organizations build and manage Bitcoin treasuries. So what do you think a Bitcoin treasury management is going to look like in 2 or 3 years from now? And how is Orange preparing for that shift? Because I got to imagine what we're seeing now very well could be very different in just the next 2 or 3 years. Things change fast.
Yeah, I think there's different types of Bitcoin treasury companies, I guess you could say. I mean, there's companies that are just operating companies that take, their retained earnings and just buy Bitcoin with it on their balance sheet, which is completely fine, which is a completely rational thing to do. And there's other ones that incorporate Bitcoin into their businesses, right? We just saw Square launched, the payments, Bitcoin payments, which was awesome development. So now small businesses can just incorporate Bitcoin payments, and then they could acquire it on their balance sheet, and that's awesome as well. Bitcoin treasury companies, in the way I think about it, like Orange BTC, we're like systematically raising capital to acquire more Bitcoin on behalf of the shareholders in a creative way. So it's more of an offensive strategy, I guess you could say. And we're basically, our product is those financial products that we give them. Right now, we have the equity, which is OBTC3. We have one convertible note, and then there's other plans in the future to develop more financial products. And then, there's just very interesting things like how can a treasury evolve over time? Well, we have a large Bitcoin treasury, and we think it's the best treasury asset that you can own that's going to compound at 30% plus a year for the foreseeable future. That's one of our beliefs. That's where I'm in agreement with Saylor. And people are like, well, where does the 30% come from? And I'm like, well, if you look at Bitcoin's rolling 4-year CAGRs since 2012 per se, the 10th percentile is 30%, meaning 90% of the time, Bitcoin's 4-year rolling returns was better than 30%. And so when we say 30%, and even the last 5 years, it's like 45%. So when we say 30%, it's actually crazy enough a conservative projection for Bitcoin just based on its historical performance. And so if we own a treasury that's compounding to that size, we are going to grow just from that appreciation. We're going to grow into a market cap of one of the largest companies in Brazil. And then when we have that capital, that pristine capital, there are so many things we can do. My experience at Swan and across our board, we have deep experience in capital markets and financial services and Bitcoin financial services. And as I said, in Brazil, the market infrastructure there is not like the United States. It's just there's not that many places to buy Bitcoin, to custody Bitcoin. They need more. They just need more of everything. And so we're going to take that experience in the future, and we're going to decide, are there lines of business that we could incorporate just because we have a large treasury of Bitcoin where we can provide some of those financial services, and then we can provide those financial products that improve access, and all of it is just going to drive Bitcoin adoption, and that's the mission, right? And so in the future, look out 2-3 years, I think the treasury companies are going to be some of the largest companies in the world if they can manage risk well and be intelligent about any leverage they take. There will be some that blow up because the management team didn't do the right thing, but there will be some that are very successful, and they will grow to become one of the largest companies. And then they will have all this optionality to drive more value for their shareholders through financial services, financial products. And so that's how I see this playing out in the next few years. Volatility is still going to be there, but it really comes down to doing due diligence and analyzing each of these treasury companies based on their own market, based on their management team, based on their balance sheet and capital structure. Do your research, because they're not all equal. But the ones that execute are going to be in a very interesting position in 2 to 3 years, because ultimately it's a leverage bet on Bitcoin. And so if we're right about Bitcoin, these companies are going to be pretty successful.
Yeah, no, I mean, it kind of sounds like, if things go the way that you and I both think, the world will be your oyster. And I do think, it'll come down to kind of there's, not all stewards are created equally. And there's some really great ones out there, the Michael Saylors, the Joe Burnett's, yourself. And I think there's going to be a lot of people that do really well in this space, but that doesn't necessarily mean that's going to happen across the board just because everybody's a little bit different, right? But with that being said, it has been an absolute pleasure having you on the show again, Sam. It's always a great treat getting to chat with you and getting to learn more about your insights and expertise on the space. And I'm sure you've gained a lot of new fans today. So for those that haven't already gotten to connect with you, what's the best place I can send them to get more of your hot takes on X and where they can learn more about what you and the team at Orange BTC are doing?
Yeah, and thanks for having me again. I'd love to come on anytime, and you guys are doing great work. Thank you. You can go. I'm on X, so I tweet out thoughts, I tweet out analysis, charts, and so you can find me at Sam Kella, SamCallallah, and you can also, my DMs are open. I leave them open on purpose, so you can reach out if you want to talk. And then also orangebtc.com, and we have a treasury dashboard up there where you could see, exactly. We're very transparent about our Bitcoin holdings, our BTC yield, all our different KPIs, as well as our balance sheets on there, as well as our historical purchase history. And so it's all on there. We have some educational resources. I wrote a paper, a primer on the Bitcoin treasury model. You can find it on there as well. And we have another one coming out, more Bitcoin 101 report. Both of our stuff's in Portuguese and English. So go check it out. And thanks for having me on the show.
Yeah, it's an absolute pleasure, Sam. And everybody, you heard it here first. Sam said to slide into his DMs, so you're going to be getting some fun messages, Sam. And we certainly appreciate all of your messages here with us in the show today. So I hope you have a great rest of the week, and thanks again so much for joining us. It's always a real pleasure.
Thank you. Have a good day.
Cheers. You too. All right, we're taking a quick break here at the Blockchain Report, but when we're back, we're going to wrap things up with a little bullish, bearish, or BS. So stay tuned. We'll be right back after this quick break. Are you interested in effortlessly growing your Bitcoin portfolio? Of course you are. I mean, I sure am. And the Bitcoin credit card by Gemini earns you Bitcoin back on every purchase. You can use it like any credit card, buy lunch, gas, or your weekly groceries. And you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. All that with no annual fee. And right now, you can grab a $200 Bitcoin welcome bonus. It's the easiest way to start building your Bitcoin stack. Just go to Gemini.com to learn more. All right, boys and girls, it's been a fun one today, so let's wrap up the show with a little bullish, bearish, or BS, where we recap our top stories and see how things are looking for Bitcoin. Let's get into it. First up, you remember Cloudflare suffered a major outage after a mysterious spike in unusual traffic this morning, knocking out major platforms like ChatGPT, X, and even Down Detector. The company still doesn't know what caused the surge, and engineers spent the morning in full-on, all-hands-on-deck, caffeine-fueled crisis mode because of it. So I am feeling bearish about this one, okay? Anytime the core infrastructure of the internet wobbles, markets instinctively de-risk, and Bitcoin often gets temporarily lumped into the same risk asset bucket, even when the issue has nothing to do with Bitcoin itself. But unfortunately, I'm feeling bearish about this one, so that's how we're starting. Next up, we got Congress is expected to release the full Epstein files, and Washington is bracing for impact as the public expects answers the documents probably won't deliver. Trump initially pushed GOP leadership to delay the vote, then switched positions once it became clear Republicans would move forward anyway, with officials insisting there's nothing new in the files and the public insisting the opposite. The only guaranteed outcome here is political turbulence. Ooh, this one's a fun one, but I'm calling BS on it, okay? I mean, this story, as fun as it is pure political noise, high drama, low signal, and markets are extremely good at tuning out anything that doesn't touch monetary policy or liquidity. So I'm gonna call BS on this one. And our last story that we're gonna get to in a second, but I just pushed up on this thing and scrolled through my entire thing here. Here we go. The last story we got here if you do recall from earlier, is that Bitcoin dropped below 90K yesterday before bouncing back to around 92K this morning as long-term holders took profits and liquidity dried up across the market, shrinking ETF flows, negative Coinbase premiums, and a risk-off macro environment all pushed price lower. Analysts say this isn't a meltdown, just the usual cocktail of tight liquidity, whales cashing out, and markets remembering macro exists. Ooh, despite that, I'm going to say I feel bearish about this, okay? Because low liquidity means even moderate sell pressure can move the price and hard, and whale profit taking signals short-term exhaustion. Risk-off sentiment and tight credit conditions weaken near-term demand, making it harder for Bitcoin to push meaningfully higher in the immediate future. The long-term thesis, though, completely intact, but today's setup leans bearish until liquidity returns and ETF demand picks back up. All right, gang, so we're taking a quick break, but when we're back, we're going to be joined by Walker America to see what's going on his show. That'll be coming on right after us here, so stay tuned. More Blockchain Report and Walker America coming to you right after this.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising. The dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Wish you could grab cash without selling your Bitcoin? Yeah, same. But hey, that's why Ledden exists. They're the global leader in Bitcoin-backed loans. We're talking over $9 billion issued since 2018 with a perfect record protecting client assets. Now you might be asking, Hank, what makes a Ledden loan different? Well, with custody loans, your collateral stays put. They didn't go degen and lend it out for yield. Nah, there are no credit checks. It funds in under 6 hours. No monthly payments. You can repay anytime with 0 penalties. And for transparency grown-ups actually want, proof of reserves reports every 6 months verified by a top accounting firm. The bottom line here, gang, is Ledden lets Bitcoin holders unlock liquidity without selling. And you can check them out at ledden.io/RoxomTV. That's LEDN.io/RoxomTV.